Welcome back to the Explainer. So, the weekend is officially in the rearview mirror, and global markets? Yeah, they're already making some pretty aggressive moves. Today, we're diving straight into the crucial opening data for Monday, June 29th, 2026. We're going to break down exactly what's happening over on the Dalian Commodity Exchange, specifically looking at those highly anticipated September 2026 contracts. And then we're zooming out to look at the massive global geopolitical risks that are literally threatening to shake up these exact numbers. Are your supply chains truly ready for the clash between shifting Chinese polymer prices and, well, looming Middle East tensions? Because that is the high-stakes reality we're operating in this week, folks. We are jumping right from the quiet of the weekend straight into the raw, unfiltered market data that dictates global trade. The numbers we're about to dive into aren't just random digits. They are the actual pulse of the global polymer bazaar. Let's get right into the data.
All right, the opening market snapshot at the Dalian Commodity Exchange. As traders head back to their desks, we need to instantly look at how the futures market is opening up. Think of this as our live ticker tape. This opening snapshot for the September 2026 contracts basically sets the tone for the entire week of trading. We've got 3 key polymers to track today, and honestly, the movement is pretty mixed. Let's break down the micro-level data, starting with our first crucial metric.
First up, polypropylene, or PP. Futures have actually taken a bit of a hit right out of the gate, opening at 7,100 RMB per metric ton. Now, to really put that into perspective, we have to look at where it left off right before the weekend. The previous close was 7,143 RMB. So what does that mean for us? We're looking at a clear downward shift, a tangible drop of 43 RMB right at the opening bell. And linear low-density polyethylene, or LLDPE, is following that exact same downward path. It opened at 6,830 RMB per metric ton. That's a 22 RMB dip from its previous close. So looking at both PP and LLDPE, the market sentiment coming back from the weekend is leaning firmly into the red. It's signaling a somewhat sluggish start to domestic demand. But here is where it gets really interesting. Polyvinyl chloride, PVC, is completely bucking the downward trend. It actually opened higher, sitting at 4,398 RMB per metric ton. When we compare that against its previous close, we're seeing a positive gain of 10 RMB. Now, I know it's a modest climb, but it is an absolutely crucial deviation from the rest of the pack. It's potentially hinting at a unique, localized demand shift for PVC construction materials. So, when we pull back and look at these 3 together, the macro view of this microdata becomes crystal clear. You've got distinct falling prices for PP and LLDPE sitting right next to a really resilient rising PVC market. Grasping these immediate domestic shifts is vital. It forms your fundamental baseline for the Chinese market sentiment this week. But listen, these numbers do not exist in a vacuum. We have to zoom out from the localized action on the Dalian Commodity Exchange and look at the macro threat, the massive global forces actively threatening these exact prices. This is where the situation gets incredibly serious. The primary development that every single bazaar participant must monitor this week isn't just happening on trading floors, it's happening in the Middle East. Right now, the global stage is just incredibly fragile. On one side, we have a temporary stand-down. Recent reports indicate that the US and Iran have paused their military exchanges. But juxtaposed against that pause is the reality of heavily elevated tensions. The geopolitical friction remains sky-high. The Strait of Hormuz, which is a critical artery for global trade, currently remains open for shipping. But let me tell you, the lingering threat is deeply palpable. And this brilliantly illustrates the chain reaction. Any fresh escalation near the Strait of Hormuz is going to trigger this exact rapid-fire sequence. You get an immediate spike in crude oil costs, which instantly inflates feedstock costs, completely drives up freight rates, and ultimately slams right into global polymer pricing across all bazaars. It is a literal domino effect, and it moves incredibly fast. So, how do we handle this? In an environment this volatile, where a single headline can shift the market in a matter of minutes, you simply can't rely on yesterday's news. You have to stay alert. The ultimate lifeline for traders right now is real-time data. You need expert bazaar updates feeding directly into your strategy so you aren't caught off guard by either domestic price shifts or sudden international shockwaves. Fortunately, there's a really straightforward way to do exactly that. Step 1, just open up WhatsApp. Step 2, send the word China to +91 93746 24365. Step 3, you instantly start receiving real-time prices, daily updates, and expert market insights directly to your device. It's absolutely the most efficient way to stay informed, stay ahead, and make smarter, faster trading decisions. I want to leave you with this final thought today. If a fresh escalation disrupts the Strait of Hormuz tomorrow, is your procurement strategy actually prepared? We've seen the baseline numbers today, and we know exactly what geopolitical tripwires are currently laid out. The stakes are immense, and those supply chain vulnerabilities, they are very real. So take this information, monitor the market developments closely this week, and ensure your strategy is ready for whatever comes next. Thanks for tuning into this explainer. Have a highly successful trading week and keep learning.